Well, the Federal Reserve, everyone, cutting interest rates for the second time in 2019 last week.
Yeah, lower interest rates help some groups, but they don't help everyone.
Yeah.
New at 4 WATE 6 on your side, consumer reporter Don Dare explains who stands now to benefit the most from the rate slash.
The central bank, the Federal Reserve, pumping billions of dollars into the banking system, mortgage interest rates will likely go down. Lower rates are great if you're looking to get a mortgage or you're able to refinance an existing mortgage. Those with adjustable rate mortgages can also benefit from lower rates. Being able to trim $150 a month out of a household budget by refinancing to a lower rate is like a pay raise to some homeowners. With a lower federal funds rate, home equity line of credit should adjust relatively quickly to the lower federal funds rate. Home equity loans are typically linked to the prime rate, so when the Fed adjusts its prime rates, the prime rate usually follows immediately. The winners are those looking to take out an equity line of credit. Rate should fall by the amount of the rate cut, and it can be a good time to do some comparison shopping for the best rate. The latest Fed move will likely lower interest rates on auto loans. While these loans are influenced by the direction and trend of the federal funds rate, they don't necessarily move in lockstep. Lower rates are a nice bonus for those of you looking to take out a new car loan, since they'll reduce the interest expense and help you get that car paid off at a lower overall cost. However, you might feel bad if you have just locked in your car loan before the new rate adjustment. Falling interest rates mean that banks will offer lower interest rates on their savings and money market accounts. CDs typically also see a decline in rates. The winners will be those CD owners who locked in their rates before the recent adjustment by the Fed. However, those with savings accounts will feel the brunt of lower rates, as banks are likely to fairly quickly ratchet rates lower following the Fed's move. Many variable rate credit cards change the rate they charge customers based on the prime rate. So as the federal funds rate changes, interest on variable rate cards is likely to adjust quickly. The winners here will be those with an outstanding balance on their cards. As a result, a lower rate is welcome news, but it's important to keep the lower rates in perspective. In addition, it could be a welcome opportunity to find a new credit card with lower rates. Some things to consider. Don Dare, WATE 6 on your side.
Thank you, Don. And if you have a consumer question for Don, send him an email at ddare@wate.com or give him a call. His hotline number is 865-633-5974.